Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to solve April 2023 University question paper. All the practical sum which were there in this particular paper under the subject Financing Rural Development, also known as FRD. Again, a very important video for all the TYBMS M6 students. Now, in this particular paper, there were two practical sum that had appeared. So let us see how to solve them one by one. Okay, now the very first question, okay, which was there was it was mentioned that calculate the break even point from the following details, and they're giving you particulars with depreciation of tools, rent, stationery, director's salary, workman's salary. Okay, after that they're giving you variable cost of the material per unit, variable cost of labor per unit, selling price per unit, and the output is 1000 units. Now, in order to find break-even point or break-even, the break-even sales, as we say, we can find in two ways. We can find in units and in rupees. Okay, but for both of them, first we'll have to do certain working no as on like we need to first find the fixed cost and the contribution. Okay, fixed cost, variable cost, and contribution. Once we have those detail, we can easily apply it into the formula and get the solutions. Okay, first we need to find the fixed cost. So we'll write here calculate the total fixed cost. Okay, calculation of total fixed cost. Now fixed cost, now what all can come? We'll have depreciation, we'll have rent, we'll have stationery, we'll have director's salary, and we'll have workman's salary. These are fixed costs irrespective to your production. Okay. So total fixed cost is equal to depreciation plus rent plus stationery plus director's salary plus workman's salary, which comes to 24,000 plus 700 plus 350 plus 600 plus 400, which comes to 26,050 rupees. Okay, that is total fixed cost. Now we need to find contribution. Now contribution is very simple. The formula is sales less variable cost. Sales is here selling price. Variable cost we have 150 and 100. So calculation of contribution margin per unit or contribution per unit we can say. Okay, contribution margin per unit is nothing but selling price minus variable cost, which is nothing but selling price per unit minus variable cost, which will include your variable cost of material per unit and variable cost of labor per unit. So it will be 400 minus 150 plus 100, so 250. So 400 minus 250 comes to 150. Okay, so we have got a fixed cost, we have got a contribution per unit. Now calculate the break-even point in unit using the formula. Break-even point in unit ka formula is fixed cost divided by contribution per unit. This is in units. Okay, fixed cost were 2650 upon 150. When you divide, we get 173.64. Now since it's units, okay, since we can't produce a fraction of a unit, we round up to the nearest whole number. Therefore, the break-even point is 174 units. If you are considering the unit point of view, so the break-even point for the company is 174 units. Now, this is from the unit point of view. Now, if we need to find in rupees, break-even point in rupees, we first need to find something called as a profit volume ratio, also known as PV ratio. Now, PV ratio ka formula is contribution upon sale into 100. Contribution was 150, selling price is 400 into 100, we got 37.5%. Once we get the PVR or profit volume ratio, we can now find the break-even point in rupees, where the formula will remain similar, total fixed cost, but it will be upon PV ratio. So total BP in rupees is nothing but fixed cost upon PVR. So fixed cost are 26,050 divided by 37.5%, and we get the value as 69,467 rupees. Okay. So this is how you'll have to solve the sum of break-even point when it is given in unit. Because they didn't mention in what we had to find, in units or rupees. So we did in both the ways. Okay. So this is how you'll have to solve the sum based on break-even point. Now let us start the next one. The next one was a lengthier sum. It was given prepare profit and loss account in the books of PNB Limited for the year ending 31st March 2020. They are giving you auditor's fees, law charges, brokerage, depreciation, director, traveling expense, discount on bill discounted, repairs, interest on balance with RBI, interest on interbank borrowing, income earned, interest on current, interest on fixed, interest on investment, interest on loan, overdraft, saving, law charges, loss on sale of investment, postage, printing, profit of the previous year, profit on sale, income from other sources, rent and taxes, salary to staff, sundry expense and sundry income. And after that, they're giving you some provisions are to be made, 185,000 for doubtful and taxation, and proposed dividend amounted to 60,000. Now, whenever they ask you to prepare profit and loss account, we have to prepare four important schedules. The very first schedule is termed as your interest earned. Okay, so we'll have to first create schedule number 13 called as interest earned. Now, let us check if we are bank. You have to think from the bank point of view. What are the interests that we can earn? So, interest on loan, yes, that will be the very first one. Okay, next we have discount on bill discounted. Okay, that is like if bill receivable discounted, that's my income. Interest on overdraft, again income from the bank. Interest on balances with RBI, again the amount which I will earn. And interest on investment, if we are investing somewhere, okay, we are going to get interest on that. Okay, so it's 47,587, 54, 587, 500, and 35,000. When we add up, we get 13,10,500. That is the entire interest earned ka value. Okay, that is schedule 13. Now, after interest on the next schedule is other income. We need to get the other incomes. Okay, so let us see which are the other incomes now here. Now, if you look carefully, I can see sundry income is there one. Okay, from bottom, I'm going income from other sources are there. Then we have profit on sale of investment, and we have one more thing here: interest earned by way of dividend. So there are four interest or four income which are other than the interest earned in the question that comes under schedule 14. So that are 74, 75, 400, 47,000, 8,000 and 69,000. The total comes to 1,99,400. Okay, this is schedule, second schedule, that is schedule number 14 that we had to create. The next one is schedule number 15, that is interest expended. Okay, that is nothing but interest expense. So if we are bank, we have to pay interest to the public on fixed deposit, on current account, on saving account, and on interbank borrowing, which we have four, yeah, four values are there. 1 lakh 60, 2 lakh 50, 15,000 and 25,000. Total come to 4 lakh 50,000. Okay, that was schedule number 15. Now last schedule, that is schedule 16, that's the longest one where we'll note down all the operating expenses. Okay, so operating expenses nothing but all the expenses come under P&L. So auditors fees, law charges, brokerage on sale of asset, depreciation, director traveling expense, repairs and maintenance. After that we have again law charges, loss on sale of asset, postage, printing, rent and taxes, salary to staff, and sundry expenses. Okay, the amounts are 25,000, 58,000, 50, 50, 22, 500, 6,000, 58,000, 70,000, 95,000, 25, 400, 98,000, 3 lakh 55,000, 90,000. Total comes to 1 lakh 2,900. Okay, I hope everyone have understood till this step. Okay, there are four schedules: interest earned, in other income, interest expanded, and operating expense. Now, if you look carefully, all these things have been posted. Okay, with the question, whatever things have been given, we have posted everything except profit of the previous year. Okay, which will be coming in our final schedule or in our final format. So, final format will be P&L account, particular schedule number amount. Number one is income. Under that, we have interest earned, that is schedule number 13. So, I'll just go behind. Schedule 13 ka total was 13 lakh 10,500. So, we have noted here 13 lakh 10,500. Second income is other income, schedule 14. So, schedule 14 ka income is 1 lakh 99,400. So, we have noted down here 1 lakh 99,400. Total come to 15 lakh 9,900. Second, expenditure. Under that, we have interest expended, that is schedule 15, which comes to 4 lakh 50,000. We have noted on 4 lakh 50,000. Next, we have operating expenses, schedule 16. Schedule 16 ka total is 10 lakh 2,900. So we noted at 10 2,900. Third is provision and contingency. Now, provision ka there was an adjustment, 1 lakh 85,000 to be provided. So we wrote it down 185. Total it up, it come to 16 lakh 37,900. So now income minus expenditure. So income is less, expenses more, so we'll get a loss. So it is net loss for, so the next is profit and loss account. So we'll have net loss for the year, 1,28,000. Second is profit and loss brought forward. So there is profit and loss opening balance, which was 3,25,000. So we noted down 128 negative plus 3,25,000 will give you positive 1,97,000. That is basically the profit and loss. Okay, the total. Now from that amount, we have some appropriation that we need to do. By default, 25% will get transferred to statutory reserve. So 1,97,500, 700 ka, 1,97,000 ka 25%, which comes to 949,250 will get transferred to statutory reserve. Second, we have a proposed dividend of 60,000. So proposed dividend 60,000. So 1,97,000 minus 49,250 minus 60,000, 87,750 is the balance which will be carried forward to the balance sheet. So the total will be same 1,97,000. Okay, so this is how you all had to solve the two sums which were there in this particular paper. I hope everyone have understood it. Chalo, with that, we will be ending this video here. Thank you.